Hey guys, it's certainly not been a great week for the stock market, and the overall market has gone down over the past week, with certain sectors, including many growth stocks and growth sectors like electric vehicles and clean energy, have experienced quite big dips. I certainly wouldn't go as far as to say it's been a market crash overall just yet, because although some stocks have seen some pretty big drops, like 15%, 20%, the overall market has not actually dropped that much. So I would say it's more of a pullback and a correction right now. Now, obviously, the next few weeks in the market are going to be quite unpredictable, and I am not sure personally whether stocks are going to continue to go down or perhaps they might go back up. So the dip certainly might not be over just yet. However, personally, I like to buy on any dip that happens, put in a small amount into some of the stocks that I like the look of the most, based on the price action that's taken place. And then if those stocks continue to dip in the next week or so, I will add a little bit more money into those stocks. So in today's video, I thought I would cover 5 different stocks that I personally like the look of based on the current price action that's been taking place. And these are all stocks that I believe in long term, but the price has gone down quite a bit in the past week or so. If you do enjoy this video and you'd like to see similar videos to this in the future, be sure to leave a like and subscribe, as that really does help out the channel a lot. And apart from that, let's get right into it. So the first company here today is one that everyone has heard of, and that is Facebook with the ticker symbol FB. So Facebook stock is currently down to around $257 per share, which is down over 14% from the all-time high back in August. With a current PE ratio of around 25 and a forward PE ratio of 19, I personally believe that Facebook is a very undervalued stock right now. Facebook's amazing value becomes even clearer when we look at some comparisons to other companies on the market right now. The other big tech stocks like Apple, Google and Microsoft all have PE ratios of 32 or higher as of right now, as well as forward PE ratios of 25 or higher, meaning that Facebook are comparatively a lot cheaper than these companies right now. And Facebook are no less of a growth company than any of these other big tech stocks, and in actual fact, they have been growing their revenue at a faster rate in recent years. So Facebook's cheap valuation is even more apparent when we compare their PE ratio to some other more mature defensive stocks. Johnson & Johnson, Coca-Cola, McDonald's and Duke Energy are just a few examples of stocks that currently have a higher PE ratio than Facebook right now. And when I see that these sort of stocks are at a comparatively similar price to Facebook, who are obviously growing a lot faster than these companies, then I really do think that Facebook is definitely undervalued right now. So Facebook is still a very fast-growing company, with monthly active users on the rise every quarter, average revenue per user trending upwards, and revenue per quarter also trending upwards too. Their revenue for Q4 of 2020 was at $28 billion, which is up year over year from $21 billion, which is an impressive 33% growth. So next up, we have a company that I actually made a full video on a few weeks ago, and that is Tattooed Chef, ticker symbol TTCF. So Tattooed Chef stock is currently down to around $20 per share, which is down over 25% from the highs of around $26 to $27, both a month ago as well as back in September too. This means that Tattooed Chef is now down to a market cap of under $1.5 billion, which is a low valuation for the growth that I believe this company does have to come over the next few years. Tattooed Chef are a plant-based frozen food company, which means they are operating in 2 fast-growing sectors. The plant-based food sector is expected to grow globally at a 11.9% compound average growth rate until at least 2027, to reach a total market size of $74.2 billion. Additionally, the total addressable market for the frozen food market in the US alone is at $55.2 billion. So definitely very large market sizes for Tattooed Chef to potentially take some of the market share from. So Tattooed Chef have been increasing their distribution points across many large third-party suppliers like Walmart and Costco, and have also been increasing their manufacturing capacity, with more plans in place for further capacity increases in the future. Meanwhile, their revenue has also been growing at a fast rate, increasing from $58.1 million in 2019 to $108.9 million in 2020, an impressive 87% increase. And this growth is expected to continue, showing no signs of slowing down. Forecast revenues are at $300 million for 2022, $500 million by 2023, and $1 billion by 2026. At their current valuation of less than $1.5 billion, there is a ton of growth ahead for this company if management can continue to deliver on these growth forecasts that they have. So next up we have Square, ticker symbol SQ. So Square is a stock that is currently down to $230 per share, which is down over 16% from the highs of a couple of weeks ago, and Square does now have a market cap of $104 billion. Square recently came out with their Q4 2020 earnings, and some people were a little disappointed with the lack of growth between Q3 and Q4, as well as their continued commitment and focus on Bitcoin and Bitcoin-related transactions. Revenue did increase 140% year over year from $1.3 billion to $3.16 billion, which was made up largely from increased Bitcoin revenue. But some investors were not happy with this, as the rest of the business has not actually grown as fast as they would have liked. So personally, I am very bullish on Bitcoin and do believe that Bitcoin is not only here to stay, but will also continue to increase in price over the years, while also growing in adoption across the US and also across the world. Now, I do see Square's Cash App as a key way to attract customers who want to potentially buy and make transactions with Bitcoin, and this can allow Square to monetize these customers in other ways further down the line. So taking my opinion completely out of it, ARK Invest, who have been very successful over the past year or so, they have actually been buying large amounts of Square stock over the past week to take advantage of the dip. They did buy more Square for their ARK-K Innovation ETF, their ARK-F FinTech ETF, and also their ARK-W Next Generation Internet ETF, which does suggest that they are confident in Square's ability to continue to grow and become a bigger player further down the line. So next up, again, one that everyone will have heard of, and that is Tesla, ticker symbol TSLA. So Tesla stock is now down to $675 per share, which is down almost 25% from the all-time highs back in January, and they now do have a market cap of $648 billion. So many would argue that Tesla is still an overvalued company despite the recent pullback, and I will admit that they are not the most attractive company from a valuation standpoint as of right now. However, with that being said, this is definitely a big pullback for the company, and Tesla is a company that everyone wants to have a piece of, it seems, and could be a good opportunity to potentially get in if you never got in on the last run-up that has taken place for Tesla. So they are the number one player in the electric vehicle market, and everyone knows that this is a sector that is growing at a very fast rate every year and will continue to do so because so many countries across the world do plan to phase out traditional ICE vehicles in the coming decades. Not only that, but Tesla do also have various other divisions of their business that have attractive growth prospects in the coming years. This includes autonomous driving, building a robo-taxi network, expanding Tesla Insurance, and of course Tesla Energy, which Elon Musk did say himself could be bigger than Tesla Automotive in the future. So I have not actually bought any Tesla on this dip because I do believe that Tesla could potentially drop a little bit lower than it is right now in the short term. But with that being said, I personally believe that Tesla will be a multi-trillion dollar company in terms of market cap in the next 5 to 10 years. And then finally, we have one of my favourite ETFs, and that is the iShares Clean Energy ETF, ticker symbol ICLN. So this ETF is currently down to around $26 per share, which is down just over 22% from the all-time high in early January. Now, as the name does suggest, this is an ETF that focuses on clean energy companies such as solar energy, hydrogen energy, and wind energy, just to name a few. So the biggest holding in this ETF is actually Plug Power, a stock that was sold off quite heavily this past week due to an underwhelming earnings report. So this ETF has performed really well over the last 12 months, being up almost 100%, and is a great way to gain exposure to the broader clean energy market, especially if you don't want to hold individual stocks. So similar to Tesla, many stocks in this ETF are priced fairly high, and I could potentially see this ETF dropping a little bit further. However, it's definitely one to keep an eye on, as clean energy is only going to become more relevant across the world as the years go by. More and more companies, governments and individuals are going to be putting more of an emphasis on clean energy and environmental awareness, leading to more and more revenue and growth for the entire sector in the next 5 to 10 years. So that is all for today's video. Please remember that these stock picks are just purely based on my own opinion. I am not a financial advisor and this is not financial advice, so please make sure to do your own research before you think about putting your own money into any stock. But with that being said, please be sure to leave a like if you did enjoy the video, subscribe if you want to see similar videos to this in the future. Both those things really do help out the channel. Drop me a comment, let me know what your favourite stock is from these particular picks today. And apart from that guys, thanks a lot for watching.